Good afternoon, notaries. 12 o'clock. Welcome. Thank you for being here this afternoon. Today we have FCT presenting fraud flags for real estate transactions, and we've got Marie Taylor here. So thank you for being here, and thank you, of course, to FCT for your sponsorship with BCNA. The Q&A box is open. The chat box is closed. So if you want to just put all your questions into that box anytime throughout the presentation, and we will, sorry for the background noise. I don't know if you guys are hearing that. We'll address those questions at the end. So I've got Marie Taylor as a valued member of FCT's legal team for 20 years. Marie is a certified fraud examiner and is an active member of the ACFE, the world's largest anti-fraud organization and premier provider of anti-fraud training and education. She's a sought-after subject matter expert specializing in residential title insurance and the effects of fraud on the title insurance industry in Canada. She has traveled across the country as the keynote speaker on title fraud for many popular and accredited FCT seminar series, educating lenders, lawyers, and notaries so that they can more readily spot red flags and suspicious indicators in real estate transactions in order to detect and prevent fraud. So thank you, Marie, and I will pass the floor over to you.
Thank you, Trista. Thank you, everyone, for taking time out of your busy schedule for this webinar. It's always a very hot and interesting topic, and one that's near and dear to my heart. We are seeing a steady increase in real estate fraud nationally, so the timing of this is perfect. What I'm going to do during the webinar is we're going to go through some trends. I'm going to provide you with some actual claims that we've had. I'm going to share some statistics. We're going to go into the flags and best practices and wrap up with any questions that you might have. So let's get started. So fraud has been around as long as there has been money. Definitely, there's been a steady increase in mortgage and title fraud over the past few decades. And like everything, there are trends that change with the times. Just like bell-bottom pants and flowered shorts were once on trend and may come back one day, the techniques and aspirations of fraudsters change with the times. The last couple of years, we're seeing an increased preference for elderly victims. There is and will likely continue to be keen interest in reverse mortgages. With the seemingly never-ending rise in property values, the equity in the mortgage-free house increased to almost...
I apologize for interrupting you. I just got a little bit of feedback. The mic, it's a little bit distorted and staticky.
Oh, no, really?
Maybe
okay.
Just a little, yeah, I think that's...
Is that better?
It sounds better, yes.
Okay, sorry about that.
Thank you.
I'm just hoping it's not my connection. I'm actually broadcasting from my home in Cambridge, Ontario. So here's hoping. So unfortunately, in many instances, the victims in cases are well known to the perpetrators. Adult children who are willing to take advantage of their aging parents have an ideal opportunity to gain access to everything that is needed to pull off a fraud. They have access to the property, the identity documents, and the financial information needed to trick a lender. Clearly, they're knowledgeable people out there working these frauds. They are knowledgeable about real estate law and the mechanics of title searching. They also know how title insurers and lenders underwrite transactions and create their scams to purposely avoid triggering some of the automatic underwriting that is triggered by certain characteristics of transactions. They scout out their victims and choose law firms and notary offices that are easier targets because of inexperience or maybe under undue financial pressure. Finally, we are seeing a trend towards a technological sophistication in things such as pristine fake ID and email hacking scams. Private lenders. This is a long-standing issue, and it continues to be the case that claims from private lenders represent a disproportionately high portion of our total fraud claims. Banks and other highly regulated financial institutions have seen stringent lending criteria imposed by regulators over recent years, and the fraudsters see the private lenders as the low-hanging fruit. Any of you who have seen some of our previous seminars know that I never miss an opportunity to educate anyone I can about FCT's private lender exception. Remember that when you are dealing with a private lender, you must make sure the balance of the mortgage proceeds are paid to the registered title holders. And if the borrower's lawyer is controlling the disbursement of funds, then make sure you get a written undertaking requiring that the balance of the mortgage funds will be paid to the registered title holders. So I'm going to give you a very high level of our fraud experience at FCT. This slide shows the costs of our fraud claims broken down by category. And I think this information is important because it gives you an idea of the relative seriousness and frequency of our claims. Keeping in mind that the percentages represent cents on the dollar, the first category is failure to register. Fraud claims involving failure to register essentially arise from one cause, and unfortunately that involves the dishonest conduct on the part of the lawyer or notary retained to complete the mortgage transaction. Now, I'm very pleased to advise that we have not had any claims in this category for the past 5 years. So it's a great attestation to our legal field. The next category of fraud claims is a new category of fraud we call fraudulent other. These types of claims would be for instruments other than fraudulent mortgages, such as fraudulent notices of security and trusts on title. The next category is spousal fraud and forgeries. Now, we see these most often in other provinces, and these ones are often involve the juicy fact scenarios, such as one spouse bringing in the paramour to pose as the other spouse for the purposes of giving spousal consent on a mortgage. We see this a lot in Ontario. These claims also involve cases of people giving false spousal statements, such as saying, I'm not a spouse, whereas the opposite is true. These claims represent just over 2 cents of every dollar. And these funds are either spent on legal fees to defend the mortgage against spousal challenges, or they're paid to lenders as settlement if the mortgage is unenforceable because of the spousal challenge. Prior mortgage, third-party fraud. The typical scenario in these claims is that a property is either sold or refinanced and a prior mortgage is not paid out. These claims represent under 5 cents of every dollar lost through fraud. Our experience is that certain lawyers' offices are often targeted, and we will see multiple claims of this type coming from the same office, sometimes without the direct involvement of the lawyer. The next category is unenforceability, fraud and forgery title. These are lender claims that represent almost 9% of all fraud losses incurred by FCT. What differentiates these claims from the bigger category is that title is transferred out of the name of the registered title in order to pull off the fraud. So for example, say a fraud is perpetrated on my property, what you would see on title is that the property would be transferred out of my name into the name of either a fictitious individual or the name of a real individual whose ID has been compromised, and then the property is mortgaged. These cases involve an extra step. And while this has always been a lower category at FCT, it appears to have increased over the past few years. Now, the next category, so I'm just going to take a drink, is fraud and forgery owners' policies. So these claims typically involve cases of stolen identity, which is then used to register a fraudulent mortgage on title. It's important to note that these claims are made under the owner's policy as opposed to the lender's policy. And the dollar amount is relatively modest because resolving these claims involves spending legal fees to have a fraudulent mortgage deleted from the title. As you know, the law in most provinces is essentially that a forged or fraudulent mortgage is unenforceable. But from an innocent owner's point of view, the mortgage still needs to be cleared from title, either by way of court order or the order of the director of titles. And in these claims, FCT pays those costs to have fraudulent mortgages deleted from title. So we're seeing a definite increase in fraud on owners' policies in the last couple of years. And what's important in relation to BC is we're still not seeing, when properties are being purchased, where notaries or lawyers are finding the necessity to insure the owner. So we'll get a purchase insuring the lender only. Am I?
Do you mind maybe just lowering it down a little bit? I'm just getting a few suggestions. I know we've all had these challenges, so.
Okay. Is that any better?
I think so.
Okay.
Thank you, Marie.
That's okay. Just feel free to interrupt.
Thanks.
Yeah, so what we're seeing is an increase in owner policy claims for fraud, but by comparison, we're not seeing an increase in owners being protected with title insurance, because in BC, for whatever reason, the value of the title insurance policy for an owner is not often recognized. And yeah, it's kind of scary on an owner's policy if they all of a sudden have to prove that the fraud on their title or the mortgage on their title was a fraudulent mortgage, and they have to pay legal fees and hire lawyers and deal with police, whereas the title insurance company looks after all of that for them. Now, the last category, and the biggest, of course, is fraud and forgery mortgage. And these represent almost 75% of the fraud losses incurred by FCT. These are lender claims where the ID of a legitimate property owner is stolen, and then the ID is used to register fraudulent mortgages, which are unenforceable. This category has increased another 10% compared to my figures from last year, and 10% more from the year before. So we are definitely seeing an increase in fraudulent mortgages, especially during the pandemic. This slide gives you a little more insight into the fraud experience at FCT. It uses the same categories we just discussed, but in this slide, the percentages represent our claims count. So for example, of 100 fraud claims FCT receives, 44% of them are for fraud and forgery mortgage. So from 2016 to 2021, FCT has identified just over 628 million in suspicious mortgage transactions. And while this appears to be a significant amount, the number of transactions that this encompasses is low in relativity to the transactions requested for insurance. Now, some of these transactions were declined by FCT. Some were canceled by our customers when they were presented with additional information that they didn't have. And sometimes the lenders themselves have canceled the title insurance and deemed the deal to be too high risk. So when any of us identifies a suspicious transaction, it may still be a legitimate deal. However, the fraud flags and perceived risk is too high to accept and move forward. In some cases, we're actually able to confirm our suspicions. Either lawyers, notaries, owners, or police advise us, but other cases we never hear from them again. So sometimes we may decline a transaction and then the title insurance is ordered from a competitor, so we wouldn't know. The only time we know is usually if we get a claim and, well, we get an asked claim. I deal a lot with the financial services divisions of police stations, and they will call us and ask us if we title insured a property. And when we look it up, it'll be either, oh yeah, oh no, we did, or oh, we declined that transaction. So typically that would be how we would find out. Okay, I'm going to go into a few examples of some fairly recent fraud claims that we've had. This is a very recent example of a fraud claim we received. But through investigation, we learned the fraudster then tried to refer a friend. I guess they got away with it once, but luckily the fraud did not go through. So on November last year, a Vancouver-based mortgage broker received a text message in Mandarin from a suspect purporting to be a Vancouver homeowner. The suspect said she was currently residing in Ontario, but owned a clear title property in Vancouver, against which she wanted to mortgage for 1.5 million. She supposedly wanted the money to invest in a business in Ontario. The suspect emailed the mortgage broker some documents, which included a forged notice of assessment and identification. The mortgage was advanced by a private lender. The suspect signed the documentation before a lawyer in Markham, Ontario. The mortgage proceeds were issued via check and couriered to an address in Toronto. The check was deposited to a bank account. Some funds were held back from the mortgage proceeds to cover the initial interest payments. Future payments were to come from another bank account domiciled in Toronto. This mortgage application wasn't determined fraudulent until April of this year, when a friend referred by the suspect to the same mortgage broker was discovered impersonating a second homeowner. In January this year, the same mortgage broker received a WeChat message from the original fraudster's number. The fraudster said that she would be referring a friend, a BC resident who was also looking for a mortgage. The second fraudster, who could be the same person, it's still under investigation, didn't contact the broker until April. The fraudster, yeah.
Sorry, I've got one last suggestion. We're just getting feedback.
Okay.
Yeah, and it's just taking away from the very interesting content that you're speaking about. So I think the suggestions I've heard, if you want to just retract the not have it extended and just pull it back away.
Let's see if that helps.
That sounds better. Yeah, let's see how that goes. Thank you.
Oh, is it that bad? Oh, I apologize, everybody.
Because everybody wants to hear it, but it you know that sound. So thank you. Yeah.
Okay. All right. So we'll try that.
Okay.
Okay. So where did I leave off? The fraudster told her that he too was in Ontario, but wanted to obtain a first mortgage on his clear title Vancouver property. He emailed her his ID, notice of assessment, property tax info. When the broker did a credit check of his name, she found a warning message that the individual whose name she queried had been a victim of identity fraud. The broker eventually contacted the real individual through the number provided on the credit bureau, and the fraud was discovered. The victim of the identity theft self-reported the incident to the Vancouver Police Department. This is an example of how the fraudsters were taking advantage of the pandemic. May not be quite as relative now, that masks aren't required. But this is what they did. So this was a $900,000 mortgage. The property was in Toronto, Ontario. It was an 85-year-old borrower who was borrowing, and it was a reverse mortgage. So they went into the lawyer's office to sign the document, this elderly woman, and she was with a caregiver who attended with her. Said the transaction was a rush. Everybody was wearing masks. The elderly woman started coughing profusely. The lawyer who was signing her up, of course, was simply horrified. He didn't want to get COVID. He wanted them to sign up as quickly as they could and leave the office. So they rushed the entire transaction through, signed the papers, the mortgage got advanced, but it turns out the real owner resided in a nursing home, had given a power of attorney to her daughter, and could never have attended at the lawyer's office in person. So this case is still ongoing, but it appears that the property was at one time
fraudsters access to the property in the mail of the legitimate owner. So one of the things that we'll talk about as well, which is difficult with the pandemic when everybody had to wear masks, stay 3 feet apart. Lawyers may not have been as diligent in checking the identification versus the person across from them because they had a mask on. So our suggestion would be get them to stand 6 feet away, pull the mask down, and take a look at the individual and compare it to the identification that was provided to you. Many of you may be familiar with the allegations against this individual known as Wan Sen Fu. In March of this year, Toronto police issued many news releases alleging this individual has been involved in more than 10 million in fraudulent mortgages. According to the police, Fu used the name Lucas and using fake identification, set up fictitious lenders, borrowers, and companies in order to obtain private mortgages. Police have released that Fu is known to frequent the Vancouver area and everyone should be considering him to be armed and dangerous. They are urging legal and lending professionals to scrutinize all identification and to be vigilant in confirming identities, especially in real estate transactions. On March 23rd, the BC Financial Services issued a news release alerting the public as to the potential presence of this individual in BC. So I cannot stress the importance of being diligent in reviewing identification, and we'll discuss some best practices later in the presentation. Early last year, we had received some information where a few properties were being targeted for fraud by a family member. This became very valuable information to us as we were able to prevent a fraud from being perpetrated. We had the property flagged in our system, and lo and behold, we received an application for title insurance on one of the properties. We had been told that siblings were posing as the registered title holder in order to perpetrate the fraud. When the transaction came in, it was for a $225,000 private mortgage. The borrower's lawyer had advised that he had never acted for the client before, but apparently there were a few transactions headed his way. Evening with the closing for the Wednesday. We had asked him if he had met with the client personally, and he advised no, he'd only spoken to him over Zoom. The client had been referred to him by the lender. The property was free and clear, and the lawyer provided a copy of his bureau, which indicated he had an excellent credit score, which led us to question why he would need private funding if he's got an excellent credit score. He did have a current driver's license. However, the client always had a mask on. When we had been alerted about the fraud, we've been provided with the true registered owner's lawyer's name at that time. So I called the lawyer who confirmed that no, his client was not getting a mortgage. Police were involved, and this was determined to be a fraudulent transaction. So needless to say, we declined it. So during COVID, the fraudsters were definitely taking advantage of the fact that people were scared of contracting COVID, and accordingly, everybody was wearing a mask. So now I'm going to go through some common flags. Some of you, probably all of you, are aware of many of them, but it's always great as a refresher to go through them again. Now, the presence of one or more fraud flags does not necessarily mean the deal is fraudulent. However, if there are several flags, it could signal a fraudulent transaction. So it's much easier to commit fraud using a private agreement of purchase and sale. There is no need for access to the home for showings. There's no for sale sign on the lawn to attract the attention of the true owner, and there's no MLS listings. It is for this reason that title insurers will often ask if the transaction is private or if there's a realtor involved. When committing fraud, fraudsters want to abscond with the mortgage proceeds. That's the game plan. Very often the alleged purchaser and vendor are in cahoots to commit the fraud. Since they are after the mortgage proceeds, they do not want to have to come up with funds of their own. So when dealing with banks, high ratio mortgages are their mortgage of choice. Often when a mortgage is insured, there's no appraisal that's conducted on the property, and the mortgage insurer relies on valuation systems that estimate the value of the home based on recent sales in the area and a drive-by of the property. This is ideal for a fraudster, as not only will they not have to expend many of their own funds, but an appraiser will not have to have access to the home. Equity gifts and further deposits are in keeping with the premise that a fraudster wants to abscond with the mortgage funds. They do not want to come up with the balance. So it is for this reason that title insurers are asking about further deposits and credits and statements of adjustments. And I think everybody's got to agree, it's very unusual for an individual to hand over tens of thousands of dollars to a complete stranger on a real estate transaction when there is a realtor or a lawyer involved. Powers of attorneys are another red flag. When underwriting transactions, we are seeing more and more the use of power of attorney to complete transactions. When a power of attorney is used, that is, if it's a valid power of attorney, the attorney should be able to negotiate the payment to the registered title holder with the use of the power of attorney. And that's why title insurers will insist that the funds be made payable to the registered title holder and not the named attorney on the power of attorney. A lot of activity or recent activity on title. If the title to the property recently transferred or a mortgage discharged immediately prior to the sale, these are indicators of value fraud, title fraud, and fraudulent discharges. Property being sold as free and clear of mortgages. Properties that have no mortgages have a tendency to be targeted for fraud. The fraudster does not have to worry about the lawyer obtaining discharge statements and the sale proceeds being eaten up to pay off a mortgage. However, we have definitely had claims where the mortgages did pay off small mortgages. And of course, we've seen frauds where it is a second priority mortgage is fraudulent. Many of the flags that are present in a purchase transaction are also present in refinance or mortgage-only transactions. Funds going to third parties is the biggest fraud flag there is. I would say probably in about 95% of our fraud claims, the funds have been directed to a third party that does not appear to be related to the transaction. And that's why with private mortgages, that's why all of the title insurance companies are now inserting exceptions if funds are made payable to a third party. It's a huge flag. Once again, recent transfers of title. We often will see transfers from trustees to beneficial owners and other non-arm's length transfers with the equity being gifted to the recipient. While many of these are legitimate gifts, attention should be given to this. And we'll discuss this more in best practice slides to follow. Or once again, signing under power of attorney, as we discussed in the previous slide. Investment properties on refinance transactions are also an easier target for fraudsters since the true owner is not occupying the premises. We're seeing an increase in fraud on investment properties. So a lot of times we find out when the claim comes in, the true owner is overseas, knows nothing about it. We've been seeing claims where the properties were listed on Airbnb and the fraudsters took advantage of the fact that they knew that there was nobody living in the property to commit the fraud. Property free and clear, which we discussed on the previous slide. So I'm going to go in through a little bit of best practices when you're doing your real estate transactions to avoid fraud. Mandate, do not close without title insurance. After the deal is closed and the funds have been dispersed, it becomes more difficult to underwrite the transaction. So if lenders have instructed you to get title insurance, make sure you get the title insurance before you close your deal, because if the deal's denied, it's going to put you in a very difficult situation. Know your client today goes much deeper than obtaining identification and keeping it in your file. Ask questions. Does the person truly look like the person on the identification? As Canadians, we're all really, really polite, don't like to question. But if you have any hesitancy in the identification, most people have, like if you open my wallet, I've got like 10, 12 pieces of identification that, people who are committing fraud aren't going to have. Like I've got a scene card, I've got an Optimum card, all of those things are in my name, right? So if you have concerns about the actual identity, ask them to open up their wallet, see a few more things with your name on it, is one suggestion. Be wary of quick closings with private agreements, trust declarations, and non-arm's length transfers. Many frauds we have seen, as mentioned at the beginning of my presentation, happen between related parties. By transferring the property just prior to the registration of the mortgage allows the property to be put into the fraudster's name. So title insurers are always looking closely at recent transfers of title. Question funds to third parties. Most title insurance companies will not insure the transaction if funds are being required to pay a third party who is not a secured creditor and there is no evidence the funds were ever advanced. This is by far the biggest indicator of fraud in mortgage transactions. What we have been seeing is the fraudsters are registering a private mortgage on the title to the property, and they're getting lawyers to register these mortgages, but no funds were ever advanced under that mortgage. So then they go to refinance that private mortgage with a legitimate mortgage to pay off that private mortgage. Well, that private mortgage is a fraudster, and it enables them now to make the funds payable to the third party in order to commit the fraud and avoid the detection of the title insurance company. So they're getting very, very smart. They're analyzing what title insurers are asking, and they're just trying to circumvent it in order to still commit fraud. If you've never acted for your client, they come in with a mask, ask them to step back and remove the mask so you can compare it with the identification while still maintaining a safe distance. I would say lastly, but most importantly, is trust your instincts. Does the deal make sense, right? If you've got a 20-year-old student who's putting a $5 million mortgage on their property, where is that money coming from? Like, ask some more questions. Or you have a 90-year-old woman who is mortgaging her property free and clear, but she's putting on a private mortgage to get those funds. With all the reverse mortgages, they're lower interest rates, right? They don't have to make any mortgage payments. They can pay it off at any time. There's so many more options. They don't have to have an income. So question the elderly person, the reason for the funds, why are they getting a private mortgage? Like a lot of it is very, it's trusting your gut. Be very careful of who you are getting your referrals from. During our fraud investigations, it's not uncommon to find an unlicensed broker is an individual who refers the borrowers. During our investigations, we find the unlicensed broker is often implicated in organized fraud rings. So the names come up, just as Lucas' name comes up over and over and over again. Take your time and breathe. I know it gets really busy month end. Those are what fraudsters are praying for. They typically like to hit around long weekends, Friday of a long weekend, busy month ends, when real estate is really busy. It's always a rush transaction. If you have a very busy real estate practice, that's exactly what they're hoping for. They're hoping you're going to be so busy that you're not going to catch any of the little red flags that might come up. If you're not sure about a transaction and think there are many flags, you can contact your title insurer. At least you can contact FCT, speak to an underwriter. We've got a lot of experience. Sometimes we can ask you to get some things that might satisfy you, or we could actually confirm your suspicions that the deal does in fact not pass the smell test. And I think that's about it. So once again, I apologize for the sound. Hopefully it cleared up towards the end. And if we have time, Trista, for questions.
Thanks so much. Yeah, that was great. The sound was much better.
Okay, good.
So the suspicious fraud transaction numbers, the figures that you had, was that BC real estate or Canada?
That's Canada-wide.
Yeah, okay, perfect, thank you. And please clarify, do not rely on statutory declarations for evidence of deposits.
Okay, so what we will often ask to see, if it's a gift and they've got a statutory declaration or a promissory note that they've signed, there should be a paper trail. If somebody gave somebody $100,000, there should be a canceled bank draft. There should be evidence in their bank account of the money coming out of that one account into their account. There should be a paper trail to substantiate the payment of that equity gift or the promissory note that was being paid out. They should be able to prove it.
Okay, thank you. We have a reminder, notaries from Ron. If there are red flags, filing a FINTRAC suspicion transaction report is appropriate and required by law, even if you decline the deal. So just a side note there, an important one it looks like. And we've got a couple minutes. So Marie, you were mentioning family transfers as possible risks. And I think this person missed a little bit of that. Can you give a moment to review that again?
Yeah, so what we've seen, it's really, really unfortunate. So when everybody says fraud, they automatically think fraudsters and stolen identification. We see a lot of fraud that is committed by family members, which is upsetting, but true. And they will transfer the property out of the name of a parent into their name. They gift all the equity, and then the child will take out a mortgage. We've also seen children impersonating their parents to get the mortgage. We've seen, which is scary but true, you know, you have John Smith Sr., John Smith Jr. You get identification. Well, John Smith Jr., he's got the ID. But if you were to look at the title, you know, dad took title 25 years ago. If you looked at the ID, he would have only been 12 when he bought the property. So we see that type of fraud as well. So we're concerned about any type of non-arm's length type of transfer. There are a lot that are very, very legitimate, of course, but it is definitely a great tool for somebody committing fraud because they want to get the property out of their name, but they don't want to have to spend any money. They want to get out of the registered title owner's name. So they'll register a non-arm's length transaction for nominal consideration. Property is moved from one person to the other, then they put the mortgage on and commit fraud.
Thank you. The $600 million figure, was that suspect transactions or attempted?
Those are suspicious transactions. So those are transactions that were deemed to be too high risk, where we couldn't get a comfort level at all on the transaction. So the transactions were declined by either FCT. Sometimes the lender would decline, sometimes the lawyer would decline because all of a sudden they don't want to be involved in the transaction, or the notary. And they say, no, just cancel the deal. And so we track those.
Perfect, thank you. I don't have any other questions. I'll just give it a minute. We've got about 5 minutes. If any other notaries had any other questions you wanted to pop in the Q&A box, and we can have Marie address that. Otherwise, I will thank you for your time, Marie, and thank you to FCT. Notaries, our next Lunch and Learn is June 22nd. It'll be Martian Chubb presenting on cyber insurance. And there's nothing else coming in, so that was great. Thank you so much, Marie.
All right, thank you very much. And once again, I apologize for the sound quality.
Thanks. Have a good weekend, or a good weekend, a good evening, everyone.
Bye-bye.
Thanks. Bye. Marie, I just had a question come in. Maybe I can just answer it to the notaries after, but it was, do the title companies share fraud? Like, do you share your?
Typically, unless we are 100% sure it's a fraud. So we've been given, do you know what I mean? A heads up.
Right.
Like sometimes it's subjective, right? It may not meet our criteria.
Okay.
So we don't want to insure it, but it could still be a legitimate deal. It just doesn't pass our smell test. So we don't want to, you know what I mean? Stigmatize somebody. Yeah.
Okay. Okay. Perfect. Well, thank you so much.
And I'm sorry about the sound.
No, I didn't know. People were making suggestions and I felt bad interrupting, but they were like, pull it away and do this. So at the end, it worked great.
Okay. All right. Perfect. Okay. Thanks,
Thank you.
Trista.
Take care.
Bye-bye.